Hi, everyone. So welcome back to another episode of the Ask Amity Show. Today we have another special episode with a very special guest. His name is Stephen Chung. He's a tax attorney based in Southern California. He's also a contributor to abovethelaw.com. So he's written a lot out there and lots of ways to find him. I'm also here with my partners at Amity Law Group, and today we are talking about the Families First Coronavirus Response Act and the PPP, and the interplay between the two, especially in the tax front. So first off, the Families First Coronavirus Response Act, it requires employers to provide for their employees with paid sick leave or extended family medical leave for specified reasons related to COVID-19. So this is available now. It's if your employees are asking for time off because they are either sick related to COVID-19 or because they're taking care of somebody who's sick that is related to COVID-19, or because they simply cannot find coverage for taking care of a child because schools are closed and daycares are closed. So employers are required to provide the time off, and also it's paid. So it's paid depending on the type of leave that they are requesting and for the reasons that they're requesting. The pay varies, and it can go as much as 12 weeks. So that's a quick synopsis of the Families First Coronavirus Response Act. So Jen, can you tell us a little bit about the PPP?
Sure. So I think many employers probably by now have heard of PPP. It's the Paycheck Protection Program loan. It's offered by SBA, and so I know a lot of business owners have gone ahead and applied for this loan. I think the attractiveness of it is not only, it's assisting the small business owners to continue in operating their business, but there is a component of it that says that the loan may be forgivable. So I think, a lot of having that forgiveness portion of it is very attractive to a lot of the small business owners. And so today, I think what's important to really figure out is, how can we make sure that once we do obtain this loan, we use it properly in order to make sure that it is forgivable, and so we don't have to pay back the government for this loan. So Stephen, maybe you can go into more detail about what the guidelines are currently. I know there's a lot of things that are potentially changing, so maybe you can introduce that as well.
Okay, will do. So the Paycheck Protection Program, like you said, it's a loan/forgivable grant and certain requirements. The first one being that the business has to have 500 employees. There are certain restrictions for franchises, so like let's say Subway, I guess under big umbrella has many employees to its franchises, but they did create an exception for that, so that each individual Subway counts as a separate business. So that's the first thing that that's the first requirement. The second requirement is you have to apply for it if the loan amount is not what you want. It's basically set by certain rules. The main rule being is that they look at they add together your average monthly pay rate and multiply that by 2.5. Now the average monthly pay rate is related by getting all of your employees' salaries plus state employment taxes on behalf of those employees, plus health insurance and retirement coverage. They put all of that together over the year and then divide that by 12, and then you multiply that by 2.5, and that will be your proposed loan amount. So generally, it's also so for a lot of people, this can be actually, well, a lot of employees can actually get a lot of money out of this. The third rule that is that each employee's compensation is capped at $100,000 rated over 8 weeks. So that meaning the calculation is basically no employee can get no more cash compensation of $15,385. But you kind of get around that rule by putting money into health insurance and employee retirement plans. Okay, so also there's a rule for self-employed people, for self-employed people who don't have employees. There are some people, for example, Uber drivers, or even self-employed lawyers with no employees. They also qualify for this plan too. So basically, how they calculate that is they look at their Schedule C on their tax returns, and then divide that by 12, and then multiply that by 2.5. So they get their 2019 Schedule C together, determine the loan amount. And then once you get all that together, you finally have to certify that you basically need the money, that current economic conditions state that this is much money you need to continue operations. So I guess one of the bigger things that the issue is, how do you determine if you are, if current economic conditions require you to use money? Now, I mean, you probably heard over the news that there were some big companies such as Ruth's Steakhouse, the LA Lakers, even though they probably could have weathered the storm, they could have also, they took advantage of this loan before returning it because of the pressure. Now, the thing is, but in terms of the Lakers, I mean, they're going to shut down. So, I mean, they're gonna need the money, maybe not so much to pay LeBron James, but maybe some members of the front office, or maybe some employees in their accounting department or the sales department, that kind of thing. So, but now it's kind of like, now the SBA issued a rule stating that if you're going to apply for more than $2,000,
Hey Steven.
you're going to be auditing your.
Hey Steven, can I interrupt you for a second?
Yeah, sure.
Sorry, there's an echo with your audio.
Is it?
Yeah.
Oh.
Yeah, we can hear it. Let me see if I can figure this out. Yeah. Are you using a separate speaker?
Separate speaker? I don't think so. Maybe I can turn down the speaker.
Yeah.
Yeah.
I think
that.
maybe turning it down might help.
Okay. How about this? Does this help?
Headset?
Oh yeah, that's a lot better. I think. Say something again.
Okay. How about this?
Oh yeah, that's a lot better.
A lot better.
Okay. Yeah. The only problem is I kind of can't hardly hear you guys. So, but I mean, if this works, then it's what it is. Okay. Better.
Yeah, we can try it. Sorry for interrupting you.
Okay, no problem. Yeah, just let me know. Let me know ahead, because I mean, God knows how long I've been rambling. Okay. Yeah. So basically, that's just how to qualify for the loan, and then I guess the $1 million question is going to be forgiven. So once you get this loan, you're basically required to follow a 75-25 rule, meaning 75% at least has to be used for payroll costs, and that includes cash compensation with a $100,000 limit, and then also payment to state taxes assessed on those employees. What this means is like unemployment taxes, California, the employee training tax, the disability tax. It doesn't give you extra for things you make to your employee. It does not cover that. So, also payments to your employees' health insurance and retirement benefits. It also covers that as well. So all of that covers the payroll costs. And then the 25% can be used for rent, your business mortgage interest. So if you own a business building at your house, even if you work at home, that's your business building mortgage interest, and then also business utilities. And then once you add all that together, you're supposed to create a report. You're going to create an application package and then send it to your lender. The SBA actually released a sample forgiveness form a week ago. You may want to look through that. And then if the bank decides that you meet these requirements, they will let you know that your loan has been forgiven. Okay. So that's kind of like the gist of it.
So, Steven, I do have a question. You said that 75% of the loan must be used for payroll.
Yes.
correct? What if an owner, for example, has been paying themselves $10,000 a month, and after they get the loan, they're paying themselves $20,000 a month?
Oh, they cannot do that. The forgiveness application states you cannot give yourself a raise, and $10,000 a month goes way over the limit. Roughly around about $7,500 a month.
Mm-hmm.
You can only pay yourself at most $15,385. So you can divide that by 8, and then that's how much you can pay yourself per year. So what I see from most self-employed individuals, when they're making over $100,000, they're going to get around $20,833. That's usually the max that they'll give. And then what they'll do is they'll pay themselves the $15,385, and then split the rest for utilities and rent. The only problem is, like, some people, they work, like consultants and maybe even some lawyers, they just work completely from home. They don't have an office address. They don't have employees. So their question is, okay, what do I do with this money? What some people are doing is they're actually hiring independent contractors and paying them off employees. That's a way to get around it. The only thing is, and maybe one of you can get into this further, that these people might be subject to California labor laws. So that's something that they have to think about.
And based on the current guidelines, businesses need to keep records for up to 6 years, correct?
Up to 6 years?
Is that correct? To just trace how the loan is being used?
No, it's just for the 8-week period from the time your loan closed. 6 years, I think you're confusing that with an IRS office.
Okay, got it. Thank you for the clarification. Is it necessary to separate the funds that we get from our general checking account to just make sure that it's absolutely clear that we're using it for payroll and rent? Some accountants or some financial advisors recommended that. I don't think it's a good idea, but I don't think it's necessary. The main reason being, for like small businesses, if you put it in a separate account, you're gonna have to pay like $10,000 a month, and it's kind of unnecessary. It might be unnecessary. It's just a matter of getting another 50 payment. It's kind of a pain for them. So if you have like if you only have 1 or 2 employees, they can keep good accounting, keep copies of paychecks. I don't think they really need to have a separate account. If you have like maybe more than 10 employees, you have a bunch of transactions. If you have a business that does like 1,000 transactions a month, then yes, I would recommend that. But if you don't do a lot of transactions in your bank, the money is easily traceable. I don't think it can. Okay.
Stephen, is it a good idea to use 100% of the PPP for wages?
I'm sorry, a good idea?
Is it a good idea to use 100% of the PPP for wages, for salary?
Well, yeah, I think that's the ideal. I think that was the ideal situation. That's what Congress had in mind in the past. But I mean, at the end, they put a 75-25 rule. I'm not too sure why. And I think, as some of you might know, there was a bill passed the House going to reduce the 75-25, 60-40. So you can actually use 40% of the rule. So I think with that in mind, this just kind of seems more like a stimulus for businesses, as opposed to the loan itself. It's only used for these purposes. I mean, if you use the money to buy a Porsche, then yeah, that's not what Congress had in mind.
Okay, and then can you cover the interplay between the Family First Coronavirus Act and the PPP?
Okay.
So employees are supposed to pay for the leave under Family First Coronavirus Act, but how do they get compensated for that? How do employers cover themselves for that?
Well, it's given through a tax credit, and most employers, they file an employment tax return every 3 months. For smaller employers, it's usually once a year. But when they file their quarterly employment tax returns, the Form 941, the amount that they paid as either as sick leave or family leave under the leave provisions, that can actually have the tax credits towards their employment taxes. Now, the good thing about this is that this is actually refundable, meaning that let's just say you had payroll taxes of $8,000. Hold on, are you guys hearing the echo? Is there an echo? I just want to make sure you guys are okay.
Yeah, we're okay.
Okay. So in case, let's just say your payroll tax bill is $8,000 for the quarter, but you pay $10,000 to your employees for sick leave or family leave. Then that $2,000 difference, the IRS will actually pay you back, or you can actually have it applied for the next quarter's employment taxes. So that's kind of the way the government pays you for that. You might not see all the money, but at least you won't have to pay the employment taxes. The only thing is, if you're going to go this route, you cannot use both the PPP and this employment family leave tax credits. So you have to pick a battle with this one.
Can you say that again? You can't use both?
If you got a PPP loan, you cannot apply for the tax credit that you're talking about.
Okay.
So basically, if you use the PPP loan to pay for their sick leave, then you can't ask for that on the tax credit end.
Right, you cannot claim the credit. Basically, the idea is that you're pretty much double dipping. There's actually one other tax provision you might be interested in, or in case for some people that did not qualify for the PPP or did not want it, like the rest of it. There's actually another tax credit where if your gross income goes down more than 50% compared to this time the year before, and you still continue to pay your employees, the government will actually give you up to a $5,000 credit to employee, but only half of what you pay the employee. So in other words, like let's just say you pay an employee $10,000 this quarter, but like this time, well, you're making half of what you did this last year. So if you paid your employee $10,000 this quarter, the government will actually give you a tax credit. So that's something. That's another provision that small business owners might want to take advantage of. But again, this is not. You cannot claim this credit if you also took the PPP loan. There is some talk about allowing that. Right now, it hasn't not looked yet. I wouldn't rely on it. So, but yeah, there's. This is also a refundable tax credit. So definitely, if you have to keep your employees employed, or if you need to take care or make sure that your employees are able to go home and recuperate, at least you can pay them and at least have the government pay the sick leave for you. So that's one thing to consider.
Stephen, a lot of business owners, they've qualified for the loan, but unfortunately, they've been very skeptical about using it because of these restrictions. Particularly right now, it's 75% payroll and 25% rent. How would you advise them in terms of how to productively use this loan, because they can't use it for operating expenses, correct?
The PPP, for certain, they can use it for certain expenses, such as mortgage interest, rent, and utilities. So, for businesses, they have a lot more operating expenses. It's just limited to those three. I think generally before someone applies, I think the problem is with the PPP loan was that a lot of people, they advertise this as free money. Well, technically it's true, but it's not true. And that's why there's such a big rush for it in the beginning. I think before, now thankfully the demand has kind of died down, and it's a lot easier to get the loan. But I think before you get the loan, you want to have like a spending plan ready for the following 8 weeks. So the first question to ask yourself is, or the application to ask yourself is, okay, am I going to have the employees pay these people? The problem now is that people are getting a really big unemployment check. So even if you want to hire them back, they might not want to, and you might actually have a harder time finding people. Because they don't want to give up their unemployment benefits, or they just rather stay home and do nothing rather than go to work, possibly get them exposed to COVID. That's kind of a problem that I think some businesses have at the moment. So have a spending plan ready. Make sure that you have employees ready to go, and then also maybe you want to check to see if your business is going to operate. Like a lot of restaurants right now, I mean, they can't operate, or they're operating at 50-75% capacity. And then some businesses, like let's say health clubs, which I definitely need to go to, they can't operate at all. They can't have any employees. So the PPP loan is not going to do any good for them. I mean, maybe the owners will get like $1,000 out of it. Maybe they can use it as a low interest loan if that's how they want to do it. But if they're gunning for forgiveness, then I mean they're just not in a position to do it because they can get all this money, but they can't use it for the purposes that at least the required purposes.
And so if it is used in, I guess, in a sense where it's not forgivable, right, then the return of the money, maybe you could talk a little bit about that.
Okay. If the loan is not, if the bank determines or if you decide to use it for something else, then it's going to be a two-year loan, and it's capped, and the interest rate is 1%. And then the first 6 months of payments are deferred, so you don't have to start paying until 6 months down the road. The bank will help you determine a payment plan, although I haven't really heard it as to how you can do this. So they have like definitely it's going to be a straight line monthly payment, like a set amount, or maybe it might be some sort of adjusted plan where you pay like a small amount now and pay a bigger amount later. Or it can maybe just be like a lump sum at the end. I'm not sure. They haven't really given any guidelines. So if you want to, like, let's say, use the money for something else, some other business-related purpose, then yeah, it could be like a short-term 1% loan, which is also a pretty good deal. Mm-hmm. The only thing I don't recommend doing is buying a Porsche or buying jewelry. Or buying.
Darn.
Yeah, no, I know. You know how much you're going for right now? I could still do that. But yeah, you can use for these things. The problem is that I've been seeing reports that the Justice Department is prosecuting people for using this money for these outlandish things. Definitely don't use the money for that, or at least make sure the money is traceable to that. Mm-hmm. So. But yeah, definitely you can use that 1%. I mean, you can if the loan is not forgivable, if you want to just treat it like a loan, yeah, the 1% unforgivable.
And then you were saying that I think they're discussing changing the percentage use, right? Possibly. Are they also thinking about extending the 8-week mark, and if they do, then would the repayment terms also change?
They are thinking about extending the I guess the use term. I mean, right now you have 8 weeks to use it, and then the new bill proposed to raise it to 24. It passed pretty much unanimously, except for one guy who always goes on everything just to get attention. So we could pretty much say it's unanimous. Most likely it's going to be the case with the Senate, and probably the president will sign off on it. So I think it's pretty much, maybe with some minor alterations, this extension period will be good to go. And this will definitely be helpful to the restaurants and maybe some of the other businesses who couldn't take this loan because of the reasons I described. So as for repayment terms, I do not know. They haven't mentioned it. I haven't really heard of any people complaining about it yet. I think a lot of people are looking for forgiveness. And then, I mean, the portion that does have to be paid back will probably be very small. And then people probably won't have trouble paying that back, especially with the 6 month deferral and the 2-year payment period. But you never know. I mean, things might change when it hits or the final version.
All right, thank you, Stephen. I think that's all the questions I have. Jennifer, okay. Cindy, do you guys have any other questions?
No.
Okay.
No, I think we're good.
A lot of information.
Okay,
That was
so
really
just
good.
one-
Thank you,
Yeah,
Stephen.
just one other thing though. It's just that if you're going to use the PPP loan, there's one tax caveat. You cannot use it. You cannot take tax deductions on any expenditures you make with the PPP loan. So if you pay your employees, pay rent, I mean that's really good, but you cannot take a tax deduction. The reason for this is because this loan is forgivable, and you're not going to be taxed on that forgiveness. So basically, you're not really losing anything or gaining anything by doing it. I think the main problem though is that number one, I think a lot of people are going to forget about this, particularly small business owners that don't have knowledgeable accountants. They probably just have like regular bookkeepers. They use a simple, use like Excel or something. They're not going to know about this. They're probably not going to be audited because it's not that bad. But that's probably, I think this is one thing that Congress should change, at least just this once. But for now, I think whoever gets PPP loans, just make sure that these loans cannot be deducted from your business income. Yeah, it's kind of I see why they're doing it, but I think logistically it's just going to cause a lot of trouble for a lot of people. Yeah, but ultimately, I think maybe it's something I want to say. Maybe one of you alluded to it, like, okay, should I get the PPP loan or should I take advantage of these tax credits? Okay, the thing is, I will 99% of the time, if you can use the PPP money, get the PPP loan. The tax credits are actually very limited. Workers, for example, like if one of the people took sick leave, the tax credit only goes to $511 per employee per day. And I believe the family leave only counts, you only get like a credit of $20 per day per employee. So there's a lot of limitations, and it's just that I think it's, and then also if you have to suffer, if you pay an employee, you have to suffer a severe reduction in discipline. So it might be very different for a lot of businesses. So it kind of depends on a lot of things. But the Paycheck Protection Program loan, I mean, it's fairly straightforward. I mean, of course, there are limitations. I think they're a lot easier to target. So, I mean, yeah, definitely take advantage of the 2 tax credits, only if you do not qualify for the PPP loan. Or maybe one other thing you can do is you can take advantage of the tax credits now, and then get the PPP loan later if you still qualify. Now, there wasn't any guidance on whether you can, like, let's say, take a credit in one quarter and then get the PPP loan in the next quarter, and so whether the prohibition still applies. So hopefully that might not be the case. But that's another thing I want to think about, and that's something Congress hasn't changed. We don't clarify in the upcoming bill. So, okay, yeah, I mean that's just something you definitely want to think about.
Thank you, Stephen. Where can people go to reach out to you in case they need your help?
Okay, well, my phone number is 818-925-4699. You can call me direct. Most of the time I'll take it up myself. Or for those of you who read about the law, I do have my email address there. You can reach out to me. I write about various topics. Or, and I hate to put it on you guys, just call you.
You can call us if you want to find Stephen.
We'll transfer them over.
Except you'll probably want some sort of referral fee for that. No. It's okay. Yeah, no, I mean, my website is stephenchung.biz. Feel free to reach me through there. You have my phone number and my websites. I'm generally willing to talk to anybody, no questions to obtuse, and I don't mind taking the call.
Great, thank you so much, Stephen. Thank you for joining us on this Friday. Really appreciate it.
Thank you very much. Well, stay safe and enjoy the rest of the beginning of this weekend.
Thank you. All right, everyone.
All right, thanks, Stephen.
See y'all later. Bye.
Bye.
Bye.